Today we will do an in-depth analysis of Suzlon Energy Limited as of the 25th of Oct 2025. Disclaimer, this video is for education and information only. It is not investment advice or a recommendation to buy, sell, or hold any security. I'm not a SEBI-registered advisor or research analyst. The video may contain errors or omissions. Do your own research and consult a licensed professional. Views expressed are not a research report under SEBI-IARA regulations, and no recipient-specific suitability has been assessed. Let's talk about company overview and stock identification. Suzlon Energy Limited is an Indian renewable energy solutions provider focused on onshore wind. It trades on the National Stock Exchange of India as Suzlon and on the Bombay Stock Exchange as 53267. The analysis date used in this educational walkthrough is 25th of Oct 2025, Asia Kolkata time. Over its history, Suzlon has installed more than 20 gigawatts of capacity across 17 countries. The current strategic emphasis is India, which contributes the bulk of new sales and execution. Leadership positions include Executive Vice Chairman Girish Tanti and Chairman and Managing Director Vinod Tanti. Let's talk about what the company does. Suzlon's operating model spans the full wind project lifecycle. It conducts wind resource assessment, designs and manufactures wind turbine generators, executes engineering, procurement and construction (EPC), manages logistics, erection and commissioning, integrates projects with the grid, and provides long-term operations and maintenance services. The company also runs a multi-brand O&M practice that services third-party fleets beyond Suzlon's own turbines. In select cases, solutions include wind-solar hybrids and firm, dispatchable renewable offerings designed to improve supply profiles for commercial and industrial buyers, as well as public sector undertakings. Let's talk about products. Suzlon's flagship platform is the 3-megawatt class, led by the S144 turbine. The S144 features a 144-meter rotor and a nameplate of up to 3.15 megawatts. Compared with the legacy S120 at 2.1 megawatts, the S1144 can deliver approximately 40 to 43% higher annual energy yield on comparable wind sites. The portfolio also includes the S133 in the 3.0 megawatt class, while legacy S120 fleets continue to receive blades, spares, and digital monitoring support. Tower solutions are typically hybrid lattice tubular designs in the 140 to 160 meter hub height range to access steadier winds. Service offerings include multi-year O&M contracts, performance optimization, and predictive maintenance. Let's talk about revenue mix. This is predominantly an equipment business. In FY 2023, which ended 31st March 2023, consolidated revenue was about 5,946.8 crore. Wind turbine sales contributed roughly 95%, or about 5,639.9 crore. Operations and maintenance revenue was about 62.4 crore, with foundry, forgings, and other items comprising the balance. Geography is India heavy. Around 95% of FY 2023 revenue, or roughly 5,640 crore, was domestic, and about 5%, near 307 crore, was international. Looking forward, mix is shifting to the latest platform. By mid-2025, approximately 92% of the order book by megawatts related to the S144 series. Let's talk about stock performance since listing. Suzlon listed in 2005. The stock price reached a peak near 448 to 460 in January 2008, and then declined steeply. By February 2019, the price was near 3.6, indicating a drawdown of roughly 97% from the peak and a negative long-term CAGR for buy and hold measured from the listing era. A turnaround began in late 2022. The share price rose about 9 times from roughly 8 to a 52-week high near 74 to 75 in September 2024, a 3-year gain of roughly 460% versus approximately 47% for the Nifty 500 over a similar window. In the last 12 months, the price corrected by about 26 to 31%. The 52-week low was around 46 in April 2025, and the stock traded near 53 to 54 on the 25th of Oct 2025. The decline from approximately 74 to approximately 46 represents a drawdown of about 38%. Historical beta is roughly 1.4, implying above-market volatility. Let's talk about the revenue trend in the last 3 years. FY 2021 revenue was about 3,294 crore. FY 2022 revenue almost doubled to about 6,520 crore, helped by approximately 808 megawatts of commissioning versus roughly 204 megawatts in FY 2021. FY 2023 revenue declined 8.8% to about 5,947 crore, with execution at roughly 664 megawatts. The upcycle then accelerated. FY 2025 revenue reached about 10,889.7 crore, up roughly 67% versus FY 2024. In Q1 FY 2026, covering April to June 2025, revenue was approximately 3,117 crore, up about 55% year-on-year, indicating a higher run rate as the order book converts. Let's talk about new products, services, and guidance. The S144 3-megawatt series is the primary growth engine and already accounts for approximately 92% of the backlog by capacity. Suzlon is expanding wind-solar hybrid and firm renewable offerings. Installed manufacturing capacity can support roughly 4.5 gigawatts per year, so the near-term focus is execution and working capital rather than heavy greenfield capex. Management communication for FY 2026 points to approximately 60% growth in revenue and EBITDA, supported by operating leverage and localization. Margin commentary centers on mid to high teens EBITDA levels. Service revenue should rise with the installed base, although equipment sales are expected to remain the dominant contributor in the next 12 to 24 months. Let's talk about the order book and backlog. At 30 June 2025, reported order book was about 5.7 gigawatts, described as the highest domestic backlog in the company's history. Mix is broad, roughly 3/4 from commercial and industrial buyers and public sector undertakings, with the remainder tied to central and state auctions. Approximately 1/5 to 1/4 of orders are turnkey EPC. The rest are equipment supply with supervised installation. After June 2025, additional awards were announced, including 170.1 megawatts for Ampen Energy in June and an 838 megawatt S144 order for Tata Power Renewable Energy in September. With incremental additions during the second quarter of FY 2026, the backlog likely moved toward the mid-6 gigawatt zone, enough for approximately 2 to 3 years of visibility at an execution pace of around 1.5 to 2.0 gigawatts per year. Let's talk about why revenue dipped when it dipped. The FY 2023 decline from about 6,520 crore to about 5,947 crore was driven primarily by working capital constraints that limited turbine manufacturing and dispatch. Demand indicators such as order pipeline and subsequent backlog remained healthy. As credit ratings improved and working capital lines opened in FY 2024 and FY 2025, execution re-accelerated. Seasonality remains material. Q4 is typically stronger, while monsoon-affected quarters are lighter. Let's talk about the EBITDA trend. EBITDA was around 559 crore in FY 2021, increased to around 828 crore in FY 2022, and was approximately 832 crore in FY 2023 before foreign exchange effects. FY 2025 EBITDA rose to about 1,857 crore, implying an EBITDA margin near 17%. In Q1 FY 2026, EBITDA was about 599 crore with a margin near 19%, reflecting operating leverage as volumes scale. Let's talk about why EBITDA dipped when it dipped. FY 2022 margins were pressured by input inflation and freight costs, even as revenue nearly doubled. FY 2023 EBITDA held steady despite lower sales because of cost control and mix improvements. Looking ahead, potential reasons for EBITDA pressure include commodity cost spikes, lower price realization in competitive auctions, and timing of higher margin project milestones. Let's talk about the EBITDA margin trend. Estimated EBITDA margin moved from roughly 17% in FY 2021 to roughly 13% in FY 2022 to roughly 14% in FY 2023, then expanded to roughly 17% in FY 2025 and approximately 19% in Q1 FY 2026. Compression historically coincided with higher commodity and logistics costs. Expansion has reflected scale, localization, reaching about 85 to 90% local content on S144, and better sales mix. Let's talk about debt to equity and whether debt is high. Balance sheet risk has reduced substantially. At 31 March 2023, debt to equity was approximately 1.73, an improvement from a negative net worth position a year earlier. By March 2025, debt to equity declined to about 0.05 as loans were repaid and equity strengthened. At 30th June 2025, the company reported net cash of roughly 1,620 crore, meaning cash exceeded gross debt. Historically, in stressed periods, gross debt exceeded 12,000 crore and debt to equity approached roughly 3.5, so the current leverage position is materially lower. Let's talk about cash flow conversion and how it compares BIT. Operating cash flow is variable in project-based businesses. In FY 2023, operating cash flow was roughly 467 crore, about 56% of EBITDA near 832 crore, as inventory and receivables increased during ramp-up. In FY 2022, operating cash flow was about 1,302 crore versus EBITDA near 828 crore, supported by working capital release. At a high level, cash conversion is better than some domestic equipment peers that historically carried heavy receivables, but below integrated power producers, where long-term offtake yields steadier cash inflows. A practical interpretation is average, positive operating cash with the need to monitor debtor days, which rose toward approximately 130 in FY 2023, and inventory discipline as execution scales. Let's talk about the stock price trend in the last 1 year. In the last 12 months, the stock traded between approximately 46 and approximately 75. The 52-week high was near 74 to 75 in September 2024. The 52-week low was near 46 in April 2025. The period included a correction of roughly 26 to 31% from the prior multifold rally. Recent trading has clustered in the low 50s. These are historical observations and are not price triggers or recommendations. Let's talk about promoter share purchases and pledging. Promoter shareholding was approximately 11.73% as of 30th of Sep 2025, down from approximately 13.25% in December 2024 due to earlier dilutions and minor quarterly changes. There were no notable recent open market promoter purchases reported in this period. Promoter pledging was 0%, in contrast to 2018 when more than 99% of promoter shares were pledged. Let's talk about valuation versus 5 peers. On price to earnings, Suzlon's trailing multiple was around 35 times, with price near 54 and trailing EPS near 1.53. Illustratively, Inox Wind's valuation has been observed in the mid-60s on trailing earnings, Adani Green Energy around the high 90s to 100 times, KPI Green Energy around the low 30s to 40 times, and SJVN on a normalized basis around 10 to 15 times. On price to book, Suzlon was near 16 times with book value per share around 3.29. Adani Green has also been around the mid-teens on price to book, Inox around 9 to 10 times, KPI around 8.4 times, and SJVN around 2.5 to 3.4 times. On EV to EBITDA, Suzlon was around 39 times using an EV near 73,000 crore and FY 2025 EBITDA near 1,857 crore. Inox has been observed in the high 30s to high 40s on some periods, KPI around 15 times, SJVN around the mid-20s, and Adani Green higher on several estimates. These are comparative data points presented for context, not judgments or recommendations. Let's talk about variables and risks, cyclicality and seasonality. Industry cyclicality and seasonality are material. Demand depends on policy cycles. Installations typically bunch in the March quarter and slow in monsoon-affected quarters. Policy and regulation are significant variables. Auction volumes, tariff caps, renewable purchase obligations, and domestic content rules such as ALMM for wind influence order inflows. Input cost and supply chain variability is another factor. Steel, composites, copper, freight, and large bearings can affect turbine costs. Execution requires scaling to approximately 1.5 to 2.0 gigawatts per year across multiple states with coordination on land, logistics, and grid. Working capital is a continual focus. FY 2023 highlighted constraints even as order pipelines were robust. Customer concentration appears moderate to low, with the 5.7 gigawatt backlog diversified across commercial and industrial buyers, PSUs, and developers. Even an 838 megawatt single award is less than 15% of that June backlog. CapEx intensity is modest near term, because existing factories support around 4.5 gigawatts per year. Technology evolution requires ongoing R&D to keep pace with larger onshore machines and hybrid or storage combinations. Foreign exchange exposure is relatively low because roughly 95% of FY 2023 revenue was domestic. Contingent liabilities disclosed around disputed indirect taxes were on the order of 188 crore. Overall, the business exhibits a policy-linked multi-year cycle and seasonal quarterly patterns. Let's talk about whether the company is regulated. Suzlon is not a price-regulated utility. It is a competitive equipment and solutions provider. However, its addressable market is policy-driven. Renewable purchase obligations, central and state auction calendars, tariff frameworks, domestic manufacturing preferences, and open access rules shape industry volume and project timing. In recent periods, policies have generally been supportive of domestic onshore wind manufacturing and deployment. Let's talk about the latest news in the last 2 months. In September 2025, an 838 megawatt S144 order was announced for Tata Power Renewable Energy across 3 states, described by the company as its largest order to date. In June 2025, a 170.1 megawatt S144 award was announced for Ampen Energy. Earlier, on the results front, Q1 FY 2026, April-June 2025, reported revenue of about 3,117 crore, up roughly 55% year-on-year, EBITDA of about 599 crore with margin near 19%, record first quarter deliveries, a net cash position of roughly 1,620 crore, and an order book around 5.7 gigawatts at June. Let's talk about analyst ratings and reviews. Brokerage coverage in India during this time frame has generally skewed positive. Reported stances range from buy to strong buy, with average target ranges clustered near 70 to 78 as of September-October 2025. These are third-party views, subject to change without notice, and are presented here for information only. This content does not endorse any target or opinion. Let's talk about which mutual funds hold the company and what they are doing. Mutual funds collectively held roughly 4.91% as of 30th of Sep 2025, compared with approximately 4.17% as of March 2024 and approximately 5.24% as of June 2025. The September quarter reflected a small net reduction consistent with profit-taking or rebalancing. Presence in mid-cap and power indices adds passive holdings via ETFs. Names disclosed among active holders include schemes from Motilal Oswal AMC and Invesco during this period. Let's talk about FII activity. Foreign institutional investor shareholding was approximately 22.7% as of 30th of Sep 2025. The prior quarter indicated a marginal trim on the order of 0.3 percentage points, typical of profit booking or reweighting. The register includes a broad set of FPI entities, indicating diversified overseas participation. Let's talk about promoter share contribution and pledging. Promoter ownership was approximately 11.73% as of 30th Sep 2025. This level reflects multi-year dilution during restructuring and equity raises. Promoter pledging was 0% as per the latest disclosed period. Historically, pledging exceeded 99% in 2018, so the current encumbrance level is materially lower. Let's talk about growth outlook from the last two investor communications. Two consistent themes were emphasized: order book strength and execution discipline. At 30th June 2025, the order book was around 5.7 gigawatts, supported by 10 consecutive quarters of net additions and follow-on wins in the September quarter. Management highlighted minimal incremental capex requirements because installed manufacturing capacity supports approximately 4.5 gigawatts per year. Credit rating upgrades have provided access to additional working capital lines, and margin commentary focuses on mid to high teens EBITDA as scale and localization increase. Let's talk about management guidance for the next 12 to 24 months. For FY 2026, management signaled approximately 60% year-on-year growth in revenue and EBITDA, with execution in a range of about 1.5 to 2.0 gigawatts and margins in the mid to high teens. The 12 to 24-month focus is conversion of the multi-gigawatt backlog, continuation of order inflows from commercial and industrial buyers and public sector undertakings, and capital discipline supported by a net cash position. Let's talk about how the future order book is looking. With about 5.7 gigawatts at 30th of June 2025 and incremental awards announced in the September quarter, such as 170.1 megawatts for Ampen and 838 megawatts for Tata Power Renewable Energy, the company appears positioned to carry a multi-year execution pipeline. India's wind targets toward FY 2032 and ongoing commercial and industrial demand indicate continued tendering activity. At an execution pace of approximately 1.5 to 2.0 gigawatts per year, a multi-gigawatt backlog provides visibility into FY 2027, subject to on-the-ground factors such as land, grid, and logistics. Let's talk about how investors generally evaluate positions. This section is educational and not a recommendation. Market participants often study quarterly execution versus backlog burn, EBITDA margins versus guidance, and working capital metrics such as debtor days. Historical trading ranges, such as a 12-month band between approximately 46 and approximately 75, are sometimes reviewed to understand volatility, with the caveat that past levels do not predict future prices. Public resources commonly discuss concepts like diversification, focusing on long horizons and avoiding leverage. Any financial decision depends on an individual's objectives and risk capacity, which this video does not assess. Let's talk about the closing perspective. As of late 2025, Suzlon combines a low-leverage balance sheet with debt-to-equity around 0.05 and net cash near 1,620 crore at June 2025. A record backlog near 5.7 gigawatts at 30 June 2025, with subsequent awards, and a competitive 3-megawatt S144 platform capable of roughly 40 to 43% higher output than legacy 2.1 megawatt machines. FY 2025 revenue of about 10,089.7 crore, FY 2025 EBITDA near 1,857 crore, and Q1 FY 2026 EBITDA margin near 19% illustrate operating momentum. Comparative valuation shows a PE in the mid-30s, price to book around the mid-teens, and EV to EBITDA around the high 30s using FY 2025 EBITDA. These data points are presented for context only. The sector remains policy-linked and seasonal, with execution, working capital, and input costs as key variables to watch. This video remains strictly educational. Disclaimer: this video is for education and information only. It is not investment advice or a recommendation to buy, sell, or hold any security. I'm not a SEBI-registered advisor or research analyst. The video may contain errors or omissions. Do your own research and consult a licensed professional.